All right, guys. Wanted to go over a couple of things today about our investment process or our investment thesis or the strategy that we're looking for at Bell Capital and share that with you guys. So, one of the bigger things that I tell all of my investors that we tend to focus on these main things that we look at if we're going to make a long-term investment for assets for our fund. So, number one thing is always going to be capital preservation. The goal of Bell Capital, my goal, is to protect your capital if you're investing with me. I treat your capital like mine. You're investing with Bell Capital, but in our fund, all of our investors tend to be looking for the same things: protection of capital, not lose money. You've heard me say it quite a bit. In my lifetime, since I was born in 1973, the dollar has lost 86% of its buying power. So if you had money sitting in a bank account or savings account or whatever, not keeping up with inflation, you have lost 86% of your buying power of your capital, your savings that are no longer going to be relevant to you. So when we're looking at a deal, my goal is to make sure that we don't lose capital. And that's usually how you do it. Number one, you can lose the asset. Number two, you're going to lose it by inflation. Just getting hammered. Is this happening, right? That's number one. So number two thing I look for in any investment is it has to cash flow when we close. No development deals, no long-term stuff. We're not looking to drag anybody out for 12 months before the deal starts to make money. The goal is any asset we look at, it needs to cash flow from day one. That means it needs to cover the debt and it needs to pay a return on our invested equity that we have in the specific deal based on how much money we raise total and our cost. All right. So that's number two thing that we look for. Number three is we always want to take advantage of future appreciation in the asset. And I also want to control that. I want to control our appreciation. Unlike the stock market where you see the yields and the stock market and SpaceX and AI, the AI race going on right now, we want to be able to take a look at an asset and say, okay, number one, first, will this asset keep up with inflation as it relates to rents are concerned in the specific location that we're at? That's number one. And then two, the controllable appreciation is we know in our managing of the management company, because we use third party management, can we put together a business plan that says, hey, our goal here is to have this asset and to be able to increase the revenues, the rent, whether that's rent, whether that's additional income, whatever the case may be, by let's say $75 a door, $100 a door. And if we did that over extended periods of time, let's say we can increase rents by $100, $75, and we did that over 10 years, that's $750 per unit. Or if it's $100, that's $1,000 per unit over a 10-year hold period on that asset in the fund, just one asset, not all of them, right? Well, hypothetically, that increase in income, increase in revenue of that property increases the value of the property. So we're getting, I don't like to say forced appreciation. I like to say controlled appreciation because we can monitor that. Now, is every year we're going to be able to increase in rents? Probably not. There's going to be some soft years, but I know this. It's just a matter of time. So that's the other thing that we look for is can we control the appreciation over long periods of time in our investments? Absolutely, because that's the type of assets we're looking for. And then the other thing, and this is big for my investors, is that we're all looking for, all of us, we're all looking for tax advantaged investments in what it is that we do. Now, real estate is good for that because the goal with real estate, just like any other goal for any investment that we're looking for, the benefit of having tax benefits or the tax advantages is because it's an illiquid investment. You should be getting tax benefits for being illiquid for a long period of time. That's just what it is, right? It eliminates what people call the loss of opportunity costs because now you're getting this big tax benefit. So those are the things that we're looking for with that. And then the other thing, as it relates to the deals that we're looking at for our fund, is always going to be scale. Can we invest in an asset that is going to give us what the scale? Now, scale handles what a lot of people consider diversification. If we can buy one asset, just one, we're just dealing with one asset right now, right? So if we can buy one property or one asset, one community, and there's 100 units there or 200 units there, we know that diversification because we have literally more tenants, we have more residents, and that our residents are our customers. Period. That's just kind of what that is, right? Do you want to buy a business that has one customer, four customers? Like for some people, like I'm going to invest in a duplex. Okay, that's four customers. If three of those customers don't come in to buy, if you were to buy that as a business, then your business is bankrupt. Now, if we buy a apartment building and it has 100 people, 100 residents that are coming in every month like clockwork, they're qualified, they want to be there, we're taking care of them, we're giving them good resident services, I like to say they're customers and clients, right? But we're taking care of our customers. We're taking care of our residents. They're going to continue on and pay. Now, will there be problems? Tenants, toilets, termites? Absolutely. But the difference of that is we have the diversification because we have more of them all coming in and paying between the first, the third, and the fifth. We pay our debts and then we pay our investors. That's the goal. So that's the diversification. But if you only have one property with one tenant or one property with four tenants, I'd rather have one property, one address with 100 units, 200 units, 300 units. That's the diversification that we're looking for. And that is the scale component that I like to see. The other thing is leverage. I would love to get a property that has good leverage on it, right? Those are the assets we're looking at now. We're making sure that, these are investment strategies or the things that we include in our decision making behind investments is the simple facts like, hey, could we get good leverage on this? Because if we are able to invest $1 buys us $3, then we know that $1 million investment gets us a $3 million deal, a $20 million investment gets us a $60 million deal, or a $50 million investment gets us a $100 million deal. Like the ability to have good leverage, good leverage on top of the scale really helps us diversify as well as it is a hedge. We can't get damaged as bad because we are now exploding what our returns are on this investment opportunity. That's why we do what we do. But I wanted to share this with you guys to kind of do a quick explanation of what it is that we look for, what I'm looking for in the fund as a fund manager, and why I do it the way that I do. So if you need anything, go to bell-capital.com. We're also having our investment, or it's an investor events that we're putting on at our office in Carlsbad. We're doing them at the resort. We want to meet you in person. But I wanted to shoot this video and send this over to you guys for those that want to get a better understanding of my investment strategy for the assets that we look for in our fund. So if you need anything, go to bell-capital.com. You can leave me a comment or send me a message and we'll get you over the RSVP and the dates. And we're looking forward to having you over there and going through the details of our fund, which naturally I'm not going to do here on the video, but I definitely want to do that because I want to meet you guys in person. All right. You guys have a great day today. Let's get after it. Boom.